The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, we saw more SRW wheat sales to China announced on Tuesday morning. That helped out the wheat market a little bit. We saw corn, an okay day there. Soybeans, kind of a volatile day. We traded about a dime or so lower, and then we reversed it back near unchanged at the close. We're going to talk about what's moving in the grain markets. We'll touch on the livestock trade, a decent rebound in cattle as well on Tuesday, and what's happening in the outside markets. Joining us for a conversation, pleased to have Jim McCormick with agmarket.net back with us here on Market Talk. Jim, hope you had a great Thanksgiving. Hard to believe it's already the month of December, and you told me before we jumped on a little bit of snow in your neck of the woods there in the Chicago area, Jim.
Well, that's it. Yes, we did have a very good Thanksgiving, but yeah, we've rolled the calendar here to December, and Mother Nature is trying to, I guess you could argue, get us into that Christmas spirit. Not a lot of snow, about an inch. Wet, heavy kind of stuff, the kind of stuff, Jesse, that I like, gets the trees coated, grass is coated, but the roads are wet, and that's it, no shoveling. So, yeah, definitely getting us a little bit into the Christmas mood.
Well, we'll see how long we could stay away from that snow that needs shoveled here over the next couple of weeks ahead. I know we can't avoid it altogether, but we'll be watching that on the weather front. But let's talk about what's happening in the markets. That's more important, I think, for folks listening in right now. They don't want to think about snow. Soybeans, interesting day in beans on Tuesday. We set a high overnight and early in the morning, 13.15 on Jan beans, 13.35 on March beans, and then quickly sold it off. We were about a dime lower the last I looked, and then I refreshed my quote screen right at the close, and we're back near unchanged. So what happened at soybeans on the day Tuesday, Jim? What's your best take on that?
A lot of volatility, but I think a lot of it is a little bit of holiday trade, Jesse. I mean, the volume is drying up a little bit, but I'd mostly attribute it to weather. The reality is South America is still getting a little bit too much rain in the southern part of Brazil, but the northern part, there is some scattered rain out there, but it's not hitting everybody. But more importantly is there's two different models. You got the GFS and the Euro model. The GFS model continues to trend drier. The Euro model tends to be a little bit more wetter. And there's kind of like a knife fight going out in the middle part of December. Are we actually going to see an atmospheric change to what's going on in northern Brazil? The crop is getting smaller by all accounts. Right now the USDA is at 163. We'll get some revised numbers here at the end of the week. The average trade guess is 1 to 2 million lower. We're in that camp, but you've got some private groups out of out of Brazil that are talking, low 150s. And, really ratcheting this crop down. Now, I don't think it's going to be that low this early in the game. Remind you, they're still just finishing up planting. But it is a concern. I think the market reacted to it. The other thing we probably ought to look at in the action that rebounded was the meal market. Late in the day, we saw some really aggressive bull spreading where they're buying the Jan meal up really big compared to the deferred months. So maybe that's a little bit of a precursor to maybe a little bit of demand coming back into the market on the meal side after this break, because the world is still very tight meal until the Argentinian crop is planted, harvested, and then crushed. So we are really the best supplier of meal near term.
I was a little worried about Jan beans breaking below $13 at one point on Tuesday, worried that could open us up to some more downside pressure, and we closed about a nickel above that on the day Tuesday. But are you worried that we've breached that psychological level in front month beans, and that could open us up to some more downside potential? Jim, what do you think?
I am less worried now than I was when the market was blowing early in the day. I mean, early in the day, that I will admit, just like you, I was like, this is not good. We're testing kind of the shelf level support around 12.98. We came off of it quite nicely. So hopefully, technically, we have seen a little bit of support kicking in and maybe kind of generate this back up. And I think there's two things that could flip this story to a bullish story on a dime. Plain and simple is, if the European model continues to be more accurate and they continue to miss the rains in northern Brazil, The weather premium that got sucked out of the market here the last 10 days could come roaring back in. And it might even be amplified because it's a time of year where volume's a little bit lighter. So your moves can be a little bit exaggerated. And the other thing is keep an eye on what's going on in China right now. They have been buying a lot of U.S. beans. They made those big purchases a few weeks ago. If they come in and buy, that might excite the market. Right now, as far as the last numbers I saw, we are the most competitively priced. And even out of the Gulf. Now, a lot of these beans have been sold or going out of the P&W, which is good, but we're hearing the P&W logistically wide is getting near capacity. So hopefully they can still go to the Gulf, but the Gulf is a little bit more tricky because of the water shortage down at the Panama Canal.
You mentioned China. China's in here buying SRW wheat once again. The Chicago wheat finished moderately higher on the day Tuesday. It really feels like wheat got down to a cheap enough price that China said, okay, it's on sale. We're going to go buy some U.S. SRW wheat here. But yet also too, wheat, all three complexes have been rallying the last week or so. So I guess what's your take in this wheat trade overall? It feels like it's been largely supportive to corn, especially on the back of these Chinese sales lately.
Well, there's no doubt about it. China coming in and buying wheat, I think has definitely helped put a floor in this wheat market. I mean, China obviously is one of your biggest buyers of commodities in the world. When they come in here and they start buying, they kind of set the market. Like, hey, if China's buying, I can't, if I'm a competitor of China, I got to realize that now I got to compete with them. And it's very hard to compete with the volume they buy. So I think that's a good sign. The market, let's face it, Jesse, and the wheat market's just been an absolute dog for the longest time as we just continue to take all the war premium out of the market. But now China's come back in. If you look at the world stocks use of corn and wheat that's actually exportable supplies, that's still some of the tightest in 10, 15 years. So I think you've got to be very optimistic. The wheat market has a little bit more to go. Also, don't discount the funds. They are carrying a pretty hefty short position in wheat, and rightfully so with the trend we've been in the big carries. But if you start breaching the 100-day moving average, I know we breached it earlier today. I'm not sure if we settled above it, but we're very close to it. If you start breaching those moving averages as we round the last month of the year, the last quarter of the year, it could start forcing some short covering by these funds who are essentially going to book their profits, essentially buy back out of their shorts before letting the market give it all back. So we're, a combination of China buying, a little bit of friendlier chart patterns, combined with a short position by the funds. Hopefully that is the recipe for a nice Santa Claus rally in the wheat market.
Talk to me about corn funds, maybe some short covering potentially here as corn's kind of gotten some of that support from the wheat trade. I mean, we're nearing the end of the year. What do you make of where this corn market stands right now and some of this fund money flow in and out? Talk to me about that, Jim.
Well, just like the wheat, the funds are carrying this really hefty short position right now, and I think they could start liquidating out of it for the same argument. They're short a lot of grain. If this market starts to firm up, they're giving back profits, and they just say, hey, I'd rather choose to book the profit than give it back at the end of the year, as well as making adjustments tax-wise. Now, if they're going to do that, Jesse, just so the listeners know, in general, they tend to do it in the first half of the December. As we get to the second half of December, they tend to close the books to wrap up the year and try not to make big position movements. So if we're going to see the short covering rally, I would argue it should happen in the next couple of weeks. But there's something else going on in the corn market I think you got to look at is we forced a lot of producers to market grain here last week as we went in the first notice day of the December contract. So if producers were out there and they had hedges on at the elevator or maybe a basis contract, they have forced to either price that grain or roll that hedge out or that basis contract out. Well, the spreads pushed out to 25 cents. So it was just a bloodbath rolling it out to the contract out from Dec to March. A lot of producers ended up dumping grain, and that might have put the low in right there as people where the market essentially does what it does best. It forces people out at the very last moment. But now that farmers essentially dumped all that grain that they had to get forced to, I think now the market's job is to try to maybe keep that grain flowing in essence. And how do they do it? They're going to bid the basis up in certain locations. So keep an eye out on that if you're a producer, as the market might rally as well as they're trying to essentially pull grain out of the market. Market to the market, at least in the near term.
It sounds like to me, and I've heard some of this too, that some of those regional basis opportunities might be the big catalyst to watch here, as you kind of indicated, over the next couple of weeks if farmers are going to do any more corn selling before the new year, because otherwise I think those bin doors are locked here, Jim.
Exactly. I mean, that's where the market's at. They dumped it where they had to. If the elevator did not get that grain from you, that final flush of grain here a week ago, now it's their job to pry it out of the farmer's hands. The farmers tend to not want to do it. The weather's cold. Let's face it, it's the holiday season. People are busy. So the market's job will do it. So if you are a producer out there, keep your eyes and ears open. If you're willing to sell some grain, make sure you let your end user know it, and don't be surprised if they give you a call. Now, the one thing I'm going to encourage people to do, Jesse, because when we get these moves, especially on the cash market, it is usually fleeting. It'll go up, and that they may bid up 5, 10, 15, 20 cents, but it may be only a few hours. So keep those orders working out there if you're a producer, or at least let the elevator know that you are in that mode willing to sell it if it hits a certain price. Because like I said, I think this window is going to be relatively short, unfortunately, because I think as we flip the calendar to 24, let's face it, the interest rates are going to be a lot higher. Storing grain is very expensive, estimated around 10 cents a month for beans, just in interest costs, 3.5, 4 cents for corn. So as we go into 2024, I think there's going to be an argument. Do I move grain, or do I take a bigger loan to finance next year's crop? And I think producers are probably going to feel a little bit more pressure to essentially move the grain a little bit quicker than they like. But that's what the end users are going to count on. So that window of that basis appreciation may be relatively short-lived. So don't be afraid to take advantage of it if you're a producer.
We are joined today by Jim McCormick from agmarket.net for market analysis. Jim, looking at 24 corn, 24 beans, a new crop. Has anything changed in your mind? Should producers be thinking about getting super aggressive here, marketing next year's crop already, or things kind of the same as when we talked about that a few weeks back? What are you thinking right now on some of the new crop stuff?
I don't know, super aggressive is the word I'd use, but I do think you've got to. I think you got to realize, Jesse. I think the tide has turned. Unfortunately, I mean, as they say, history doesn't repeat itself, but it does rhyme. Okay, and what we mean by that is the patterns usually are very, very the same. Coming out of the drought year of 2012, you had explosively high markets, and then 2013 you had decent prices, and by 2014 we were plain and simple, down to 350 cash corn, and everyone was struggling. We're doing the same situation. 2 years ago, we had the high prices of corn. Last year was a decent price, but not as good as the year before. 24 is setting up to be like 2013-14 was just a few years ago, and that, unfortunately, is going to be a little bit negative. When you look at the carry-in right now, potentially 2.1, 2.2 billion bushels, it is a huge cushion for next year. You take that, combined with 91, 92 million acres, a lot of producers right now who are starting to do the math for next year are saying, look, the money's in the corn. So I think there's a decent shot. We get 91, 92 million acres of corn. We happen to have a trend line yield or close to it, 180. The writing's on the wall. We are going to overproduce, and the market's going to go down. To put it in perspective, the last time the funds were this short corn futures are trading at $4. The stocks to use right now are projected around 15%. From 2013 to 2018, when ending stocks averaged between 12 and 14, 15%, the average farm price was within 10, 20 cents of 350. So you can see where we're at historically. When you got stocks use where we're at, this corn market is still holding a lot of premium, and that premium will eventually work its way out if we have anywhere close to a normal crop. The only thing I think that might derail it would be either A, China coming in buying a lot of corn unexpectedly, or B, the weather just doesn't cooperate.
Fantastic perspective. I really appreciate that. Good thoughts to consider. Outside market moves, anything influencing there? I know we had a wild day Monday in gold. We were watching the US dollar or watching interest rates. Still got high rates, but maybe some talk that things could ease as we get into next year again. Obviously, just there's a lot going on in the outside market picture. Anything big you're watching there that is having an impact on some of this money flow into and out of commodities and livestock, Jim?
Well, I think on the money flow, look at gold. Gold's kind of nice to see. Like I said, it made a new all-time high, I believe, and that's exciting to see. It shows some money is starting to work its way back into the commodities. The reality is commodities have kind of been a negative term for the speculators the last couple of years, because when you're in a essentially a high interest environment like we've had, they didn't want to own commodities. Well, now the Fed is essentially signaling that it's done raising rates. The market's even thinking potentially they're going to cut rates. That's bringing money into the commodities. It's pushing the dollar down. That's good. If the dollar starts to weaken, it keeps us competitively priced on the world market and will continue to drive demand away from South America into the U.S. shores. So that's kind of what we're watching for, is this dollar to continue to weaken. But on the other hand, keep an eye on the economy. The cattle market is going to hinge, I think, a little bit on demand. We've always knew that the cattle supply was going to be tight. We knew that forever. Then the placements numbers came in, surprised people. Essentially we know what happened. It tanked the market. But we're going to have a cattle on feed report here, or not the cattle feed report, excuse me, a USDA WASDE report here at the end of the week, and they're probably going to show beef production relatively down in essence. So it's going to continue to show in general we've got a tighter supply by historical measures, and if the economy does stay strong, hopefully that will give us a rebound in the beef market. But just like the grains, I think if you have an opportunity to lay off risk at profitable levels, I'm going to encourage you people to do it.
And I was going to say, too, following up on cattle here, it's felt like a lot of funds decided that they were done being long in this cattle market and got out. And that kind of led to a lot of our volatility here since Thanksgiving, really. But I wonder, too, I know typically you can help me out with this a lot better, but I've seen it before where you have so many volatile swings that could start to kind of indicate a bottom in a market. Are we maybe finding a bottom here, so to speak, in both fats and feeders after all of this wild volatility the last 10 days or so, Jim?
Well, trying to call bottoms is always a deadly game in this business.
I know.
There's no doubt about it, but I'm optimistic that I think we're close to putting the bottom. And we had a nice little rebound today. I'd like to see a little bit of follow through on this, but I think we've gone too low too fast. Like I said, I think the overall supply of cattle, the actual cattle herd, it's still very tight. It's going to tighten as we try to expand. So I think, and like I said, we've washed a lot of the funds out. So I'm hopeful that this cattle market will start to work its way back up, at least give us kind of a dead cat bounce retracement rally.
Jim, before we wrap it up, final thoughts from you. Anything else you want to mention or reiterate to folks today, whether it's on the grain or the livestock side for us?
Right now, I guess the thing I'm going to reiterate, Jesse, to your listeners is now's the time to really start looking at your profitability, not just of the 23 crop, but in the 24 crop. In the 23 crop, look at where your yields are. I know in the West, the yields have not been as good as they thought. In the East, the yields are phenomenal compared to what some people thought. They need to recalculate. Now they know what their production number was, where their break-evens are. Now the kind of a dynamic break-even, what you need to sell the grain for from here on out to make profitable levels. And then on the 24, it's the same situation. Do not be afraid to lay off risk. The one thing we've learned, I think, in the last couple months is the market giveth and the market taketh. When it takes it takes it a lot quicker. And, unfortunately, I think, like I said earlier in the conversation, especially in the corn, the dynamic is changing. We are building supplies. If South America does not have a production problem, and Brazil, the headline in Brazil is the weather issues, but the reality is it's kind of like June here in the United States. If they start getting good rains and they have a good crop, the bean price is probably going to work lower because we're essentially going to overproduce for what the world needs. And the market's goal at that time is going to go down to essentially dissuade production or stimulate demand. And it usually will go lower than people want. Just like it goes higher than people think, it tends to go lower. So now's the time to really start building those marketing plans for the grain that's unsold as well as the 24.
Jim, I know folks can reach out to you and the team there at agmarket.net if they have questions. They can go online to agmarket.net, sign up for research, find phone numbers, etc. I know, too, you guys have your conference coming up in Nashville early in 2024. Give us a plug for that. What can folks expect?
Yes, we do have a conference coming up. It's Sunday, the 3rd and 4th of February. Essentially, it's the weekend before Super Bowl Sunday, so you're not going to miss the football games. We kind of scheduled it that way. It's a great conference, folks. You're going to have Eric Snodgrass. I know Jesse's had Eric on before. Eric Snodgrass, Dan Bassey, David Hightower, Randy Dowdy, as well as the Ag Market team and JST team, giving you economic outlooks. We're very excited about it. We think there's a lot of good information about it. And 24 is definitely going to be a challenging year, but there's going to be opportunities. You just got to be ready to take advantage of it. And as Jesse said, just go to agmarket.net. On the top banner, it'll give you all the information you're looking for.
And I'm looking forward to being there as well, since it's in my backyard here in Nashville. And it was a great conference last year. Looking forward to another great time this year. With that, Jim McCormick from agmarket.net. Appreciate you being on the show with me, my friend. Thanks so much. And we will talk to you again real soon.
Thanks for having me on.
That's going to do it for Market Talk today. Find us online at markettalkag.com. I'm Jesse Allen. Have a great afternoon.